I'm still hearing very strong consumer demand at the high end. And at the lower end, what I'm hearing is the start of the kind of trade down you normally see when things get a little tighter.
While it's one thing for a Fed head like Richmond Federal Reserve Bank President Tom Barkin to tell us here on Countdown he's seeing consumer discretionary spending stay firm at the higher end, it's kind of another when short sellers throw in the towel on their bearish bets in the sector. According to data from S&P Global Market Intelligence, short interest in consumer discretionary stocks fell 1 basis point from the end of April to mid-May. Okay, tiny, but it's the first time that since November, short bets for consumer discretionary companies have declined. Now, if you're looking for a way to get a taste of the sector, but you're still very wary of headline risk, Wall Street is toasting one particular company, Duckhorn Portfolios, jumping 3.5% right now. The luxury wine company just released its quarterly report where it not only beat on both the top and bottom line, but raised its fiscal year forecast. Now, considering some of their wine costs $200 a bottle, how are they doing it? Joining me now, President and CEO of Duckhorn Portfolio. Right, you guys used to be called something else, right? Alex Ryan.
When we took it public, we tightened up the name a little bit to Duckhorn Portfolio.
Yeah, it's an exciting name. You've got all different kind of duck-related names of wines in your broad swath, but you also have a broad swath of pricing. Yep, right behind. Yes. Look at you, Carol Merrill. $25 a bottle, but then all the way up to what, 200? Is that your highest, or do you have even more expensive ones?
You know, essentially, we're in that $25 to $200 space, and we think that that's the really the fun and exciting part of luxury. Luxury can span many areas, but at scale and growth, we think that between $25 and $200 is really where the luxury consumer, there's growth there, there's opportunity, there's experimentation, and we're seeing a ton of success there, as you can see in those last earnings results. And we think that going forward, and it was interesting on your previous segment, we're seeing a slight bifurcation as well. People are interested in luxury wines. They're interested in the wine country experience, which is translating into really evangelists. And so right now, we're pretty bullish on the luxury wine sector. And we think going into the future that there'll be some resiliency amongst the type of customers that buy our wine should things turn down a little bit.
Alex, who are the type of customers who are buying your wine? And can you give us any sort of real feel experiences as of late? I don't want to hear about 2 months ago, because we start hearing from all kinds of companies saying, oh, things have changed in the last 2 months. But who's buying what? Do you have people buying en masse, the more expensive lines, or a lot more of the less expensive vinos?
No, that's a great question. And right now we're seeing crowded tasting rooms. We're seeing demand to visit the tasting rooms. And those customers are walking out with, across the board, which is part of the design, the expensive stuff and the less expensive stuff. So we don't see people changing their habits within our portfolio. We still see people excited about taking, in some cases, large baskets of wine out of the tasting room when they're tasting unique products at relatively high prices, because it's an experience of something unique that they got that the friends didn't get or something. On the same token, we're not seeing any buying pattern changes on the more moderately priced luxury wines, that decoy class wine that you see a little more broad distribution. So really on both fronts, the upper end and the lower end of our sector and our category and the price points that we offer, we're seeing broad-based adoption and evangelism. So right now we're encouraged by that.
I'm sure, but you also have to deal with at least some level inflation, do you not? I mean, the good news about your company, and Credit Suisse pointed this out, is that you are not as exposed to the global issues and supply chain problems. But we know that glass bottles have been short to come by. There's a cork shortage. What part of inflation are you experiencing? And are you laying off? Are you hiring? Are you raising your prices? How are you getting your arms around it?
Yes. Generally speaking, we, as a luxury product, you would expect us to have a cadence to our price increases. I don't think we should be just rattling off new price increases because of troubled times. I think we're looking at it over the long term. So we are instituting some price increases and working with our distributors and our partners carefully. And we think that they will be adopted relatively easily within our space. No, we're not are laying any people off. We're a growing company. We're making a lot more wine. We're doing a lot more distribution. It's a nice place to work, and we're very fortunate to have a great talented team. We are currently adding to that team, and we'll do it carefully, obviously, but we need good people, because that's the real soul of a company. We need good people to continue to do the good work and continue future outperformance in the market. Your other point, supply chain issues, we've navigated them well. We're largely exposed domestically and regionally. We have our glass comes from Mexico. We have a great relationship down there and have contracted for furnace time. Not what you're hearing about in the media largely is Chinese glass coming over and having trouble making it and then getting it to port. We've navigated around that. We are seeing some modest increases in packaging materials, but certainly nothing extraordinary. On the grape front, the critical part, the largest part of a case of a wine, is an extremely well-diversified landscape of estate fruit, vineyards we own, plus contracts, wide range contracts with growers throughout the state of California and the state of Washington. And so we think we have a real buffer there in terms of anything getting away from us. I don't foresee our costs being a surprise to anyone. They're well managed, and we have a lot of visibility into them because they're such long-term in nature.
Yep. Okay. So here's a CEO, guys, who is hiring. And by the way, stock went public at 15. You're one of the few who went public last year that is now above comfortably enough, right? At $20 a share. Good to see you, Alex. Thank you for joining us.
Thank you. Take care.